As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Welcome to Stocksnipertrading. In today's tutorial, we will be going over support and resistance. Support and resistance is critical when identifying breakouts and breakdowns and consolidation in pricing. The green line on the bottom represents a support level, which is seen as a floor and where buyers and demand meet. The upper red horizontal line represents resistance and sellers and is seen as a ceiling where price doesn't seem to break above and we encounter levels of selling pressure. Support and resistance. Support and resistance levels are important points in time where forces of supply and demand meet. Technical analysts use these zones for market psychology and buy and sells. These levels are visualized on charts and are price levels that consistently reject attempts to exceed above resistance or below support. Supports are a price level that the price will not fall below, whereas resistance is a price level that the stock cannot seem to rise above. The longer these levels hold and become stabilized, an eventual breakout or breakdown will occur. Support is a barrier or a floor at which demand of buyers is strong enough to keep the price of a security from falling any further. This means that the price is more likely to bounce off this support level rather than break through it. However, if this support level is broken, the price will continue to fall until it finds another previous support level. The rationale is that as the price drops and approaches support, buyers, demand, become more inclined to buy, and sellers, supply, become less willing to sell. Also, support levels will show strong buying volume as buyers are getting a fair value of the price. The resistance level is the opposite of the support level. It is where the price finds resistance as it rises. Resistance is a barrier or a ceiling at which demand of sellers is strong enough to keep the price from rising any further. This means that the price is more likely to bounce off this resistance level rather than break through it. However, if this resistance level is broken, the price will continue to rise until it finds another previous resistance level. This pattern of breaking a resistance level is called a breakout, and the price soars. As a previous resistance is broken and a breakout occurs, it will act as a new support level. Support and resistance parameters. Length, height, and volume are common parameters a trader will use to strengthen their support and resistance zones. Length. The longer the duration of support or resistance, the more reliable and stronger it is. Longer duration shows more touch points, confirming more positive sentiments. Height. The broader the distance between the support and resistance, the more powerful it is. Volume. Higher volumes add strength to the support or resistance and indicate that more traders have the same sentiment at the particular time frame. Here we have an example of support and resistance from our trading view chart. And in this example, we are identifying XAU USD, which is gold, and we are on the 5-minute time frames, where each individual candlestick is 5 minutes to form. We have a support level established at 1854.67. This support level illustrates buyers in the market buying gold. Every time the price level reaches this level of support, you can see we either have some rejection wicks where we have buyers pushing the price up, or we have bullish candlesticks. At A, we have the support level, and this is where we get this big bullish engulfing candlestick completely engulf the previous red bearish candlestick. As price action rises, now B, we reach a level of price consolidation, where now we continue to trade sideways, forming a bull flag. As we break out of this price consolidation, price level of gold continues to rise, where it reaches a level of resistance, C, where we have sellers now entering the market to push the price down. As the price of gold reaches the resistance level at 1857.92, we encounter selling pressure at this resistance as we cannot break through it, and we get a bearish engulfing candlestick, which completely takes out the previous buyers from that particular time frame. As price action goes down, it comes down to the level of support where we either break through it or we bounce off of it, and we continue trading in this range in between the support and resistance until one of them is finally broken. Let's take a look at how this looks live. So here we have the green is the area of support and red is the area of resistance, where we get up there and you can see we have top wicks getting rejected. This is showing sellers pushing the price down at that level of resistance where the buyers cannot break through it. And then price action comes back down where we have that candlestick where it came red bearish all the way back down to our green support, where we bounced off of it and we had buyers enter the market again as the sellers could not break that support level. Here now we have a bearish candle coming all the way back down to the support level. So you can see that we're bouncing around the support and resistance until we finally break through one of them to establish a new uptrend or downtrend. As we reach this level of support, we now have a bullish engulfing candlestick, which completely takes out the previous bearish candlestick. This bullish engulfing candlestick was formed at the level of support where we have buying momentum coming into the market. Price now trades sideways in this price consolidation, which we call the Stocksniper trapping gap. And what we're waiting for is a breakout to the upside. And we can see right now, price action broke out of that consolidation and we reach again the level of resistance where we cannot break through it, but we encounter selling pressure and we continue down with this bearish engulfing candlestick, because at the level of resistance, we have heavy sellers up there and a lot of selling momentum pushing price back down. Price now consolidates as it continues to come down, eventually reaching the support level again, and we either break through it to the downside or we will bounce off of it and continue back up to resistance. A quick recap: support and resistance. Support is a floor which represents buyers in the market. Resistance is seen as a ceiling which represents sellers in the market. Resistance is supply and support is demand. Breakouts occur at these areas if we can break through them. And the parameters are length, height, and volume are all important involved with support and resistance. We really hope you enjoyed this tutorial on support and resistance, and on our next tutorial we will introduce uptrends.